One of the biggest falsehoods perpetuated by banks is that our money grows in our bank accounts. The truth is that while the numbers may increase due to interest, the actual value of our money does not grow, especially when considering the impact of inflation. Inflation is soaring, and bank interest rates are not keeping up, which means keeping cash in the bank is essentially causing a loss of purchasing power. In this video, we will discuss 6 assets that can prevent this wealth erosion and help you create intergenerational wealth. 1. Precious metals, gold, silver, and platinum. Money is considered valuable because it stores value for the future. However, with governments constantly printing more money to finance deficits, the value of paper currency becomes uncertain. This is why the wealthy allocate a portion of their portfolio to precious metals like gold, silver, and platinum. These metals tend to increase in value during periods of high inflation. For example, the price of an ounce of gold has risen from $400 in the 1950s to over $2,000 in 2023, and it is projected to reach $10,000 by 2032. Investing in gold ETFs, exchange-traded funds, is a more accessible way to gain exposure to gold without physically owning it. 2. Industrial commodities, raw materials. Precious metals are not the only valuable assets. Industrial commodities like silver, cobalt, nickel, and copper have high demand due to their utility in various industries, such as electronics, medical equipment, and energy production. For instance, cobalt prices have increased by 100% in just 10 years due to its crucial role in manufacturing batteries for electric vehicles. Investing in stocks of mining companies, mining-focused mutual funds, or derivatives like futures and options can provide exposure to these raw materials. 3. Safe haven currencies. Geopolitical stability is a significant factor when safeguarding your investments. While no currency is backed by gold anymore, countries with stable economic systems offer a safer environment for preserving wealth. The Swiss franc, for example, is considered a safe haven asset during times of turmoil. It has shown appreciation against other currencies during past crises, such as the Eurozone debt crisis in 2009 and the global financial crisis in 2008. Currency ETFs and forex brokers allow smaller investors to gain exposure to currencies like the Swiss franc, British pound, and Chinese yuan. 4. Sovereign guarantee. Although fiat currencies are not backed by physical assets, they are still considered to be supported by the full faith and credit of the government. Investing in government securities, GSECs, can be a valuable store of value because strong governments are unlikely to default. However, it is essential to invest in stable governments with investment-grade credit ratings. For example, in the U.S., Treasury bills, notes, and bonds backed by the strength of the government in the global economy offer better returns than keeping money in the bank. 5. Value stocks and mutual funds. Stocks offer higher returns than cash, but they also come with higher risks. Value stocks, which have strong fundamentals and established demand, provide stable price appreciation and dividends. However, researching individual stocks can be time-consuming and challenging for average investors. Dividend-focused mutual funds, such as the Vanguard High Dividend Yield Indexed Fund Admiral shares, provide a stable dividend-paying history and are suitable for retail investors seeking exposure to value stocks. 6. Land and real estate. Land has always been a valuable resource due to its scarcity and diverse applications. Investing in land and real estate acts as an excellent inflation hedge. Housing prices have historically increased, even with occasional downturns like the 2008 housing bubble. Real estate investment trusts, REITs, allow investors to gain exposure to real estate without significant capital requirements. REITs like Ventus Incorporated, which focuses on healthcare real estate or owning rental properties, can provide investors with real estate exposure. By diversifying your investments across these 6 asset classes, precious metals, industrial commodities, safe haven currencies, sovereign guarantees, value stocks and mutual funds, and land/real estate, you can protect your wealth from inflation and create intergenerational prosperity. It's important to conduct thorough research, consider your risk tolerance, and consult with a financial advisor before making any investment decisions.